Well, people, it's time for the big banks to start reporting their earnings of the likes of JPM, Citigroup, BlackRock, Wells Fargo, and PNC coming into tomorrow's open. So we're in the eye of the volatility storm. I'm going to talk about some implied volatility that I am seeing. We're going to go into key expected moves for these banks to watch out for. All that and much more on today's Stock Market Brief show. So let's go ahead and get into it. Alrighty, everybody, welcome back to the show. So yes, today we had our inflation data come out, and guess what? Woohoo! Core inflation is down again. Yeah, Paul Krugman coming out and saying, the war on inflation is over. We won at very little cost. And then there's a chart going down. And then there's a big bold letters over here that says, well, this is actually CPI excluding food, energy, shelter, and used cars. So basically, what exactly did we win? And if you take a look at the United States inflation rate, including those, we came in at 3.7, which was, in fact, higher than expected. How did the markets first react to this? Well, the market started trailing up over here on looking at the Qs, and we had people in the comments saying, great day for higher than expected. But I posted out this on Twitter at about 8:30, and the reason why is because, well, we look at intermarket assets that are taking place. So this was a knee-jerk reaction. We said how the market has currently handled CPI data. Take note of bonds, dollar, and small caps. Why? Well, if you take a look when I posted this here, you had the dollar that was up, you had 10-year yield that was up, right? Bonds were down. And then you had small caps right over here, which was down massively. Meanwhile, the Qs were up and the SPY was flat. So what happened shortly thereafter when the market started to take note? Well, the Qs dropped 1.67% intraday in an immediate flush, and they're seeing some relief towards the end of the trading session. This happened to be also the flush took place when we came back up to the weekly expected move. You can see we came all the way up there, right? Boom. And then we started rejecting outside of that daily expected move. But remember, 68% of the time, we closed within it, and guess what? Boom, we came outside and we came back within it. We'll go over the updated levels here momentarily. If we take a look at the 10-year yield, this was a massive move in the 10-year yield, up 2.55% to close at 4.71% on the 10-year yield. That pushed bonds down significantly. The TLT was down 2.71%, right? It's following its trend. We talked yesterday, we saw a bounce and maybe it gets pulled back, right? We need to see something, base out to be a little bit more bullish there after that breakdown and back test right over here. Take a look at the dollar. The dollar up was a massive move today, also pushing down the price of the S&P 500. You can see we've been pulling back, and we said, hey, is this just a pullback and then we're going to resume the uptrend? Well, we may. This was a very large outsized move, though, in the dollar. If we take a look at the 11 sectors that make up the S&P 500, energy was up and tech remained flat on the day, really helping the overall market. And then you have that rate sensitive name down here, utilities, even real estate, that took the blunt force of today's price action. So going into tomorrow, we have before the open, some big banks reporting earnings. I want you to go ahead and take a screenshot if this is important to you. These are the expected moves going into the earnings of the likes of JPM, BlackRock, Wells Fargo, Citigroup. I even added PNC and then United Healthcare or UNH. Okay, you have their expected moves for their earnings. You have the upper level, lower level, and then I even include the 2 sigma levels there. If we take a look at some of these charts like JPM, this is what those ranges look like. Pretty large range where price can come all the way back down to retest these lows or even back up here, up above that area of resistance. BlackRock, we can see that, hey, we had a big move down. Boom, we started bouncing. We saw some sell side today. Are we going to be coming down here to 615 and tagging or 655? Wells Fargo looks like a little bit of a bear flag here too, but we'll see how they report, whether we're going to come back up here, which is still below a flat 200-day moving average, or we're going to start taking a hit more to the downside. Citigroup, you can see big range over here. So nothing new here as we come into earnings season. If you want these levels, obviously screenshot the expected moves or just download the chart deck, which I'll include for free, okay? I just wanted to call out here that, yes, financials, they do hold big weight in the S&P 500. And where you can see here that the implied volatility just for the financial sectors is at about 32% going into tomorrow's expiration. And then you have the SPY over here at a 19%. So XLF is going to hold massive weight coming into tomorrow, given the fact that we are reporting earnings for the big banks. If we take a look at the S&P 500 on the weekly time frame, look at where we are. No surprise, right there at that weekly 5 EMA, right? There was a lot of sell side today, but remember, we're still up on the week as it stands. If we take a look at the daily time frame, this bullish engulfing candle still holding true. When it doesn't, it means that this low would have to get taken out and the year-to-date anchored VWAP. So we look for pullbacks into specific areas to be bullish, okay? The quarter-to-date anchored VWAP is still moving up. One thing to note, we didn't fill this gap yet, and this down day was on a larger than normal volume relative to the last couple of days. So we had a big reversal candle, a couple light trading days, right? We talked about momentum slowing, and then we had a distribution day, but it wasn't above average volume by any means. It was just above average for the last few trading days. If we take a look at the SPX, I want you to go ahead and either screenshot this or download the chart deck. I wanted to call out that we are above the gamma exposure level over here. This was for the next expiration, and that means we're in positive gamma territory. Now, the total gamma flip is still up here at 4453. So as it stands right now, we can look for potential dips to buy. So we can take a look at that lower daily expected move, that in blue, which is 4317. Then I have some other gamma exposure levels here. If you'd like to put them on your chart, obviously just download the chart deck or screenshot and put the levels on your chart. If we take a look at the updated daily expected moves coming in for the SPY, 430.46. The 2 standard deviation move is 427.26. And then we have the weekly expected move up here, which we tagged twice. It's a little happy place. You can see prices rejecting it up in that area. 436.86 is the upper daily expected move. You can see we are forming somewhat of a bear flag. If we do break down, that takes us to and around the quarter-to-day anchored VWAP, and which is also the month-to-date anchored VWAP, and the 2 standard deviation level there, which we can start looking. But keep in mind, even if we were to break down, we're still above kind of that rising, quarter-to-date anchored VWAP as it stands. I don't have the 5-day moving average up on this screen right now, but that's also up and rising too. So we look for various dips to potentially buy. As it stands right now, key level to watch out for is obviously breaking down this prior low and then looking into that daily expected move. Other than that, I'd say take it fairly easy in the midst of all of this volatility until things start to coil back up again, start to contract, right? We see big expansionary moves. We contract, we move, we contract, we move, right? We contracted, we moved, we contracted. Now we're starting to move again over here. We moved and then we kind of contracting right now into that bear flag pattern, okay? So other than that, that's all I got for you on today's episode, everybody. Be careful. It's going to be a wild one tomorrow. See you later.